Hey guys, welcome back to Bite the Book. Today we're gonna look at February 7th, the 10th, the 11th. So let's just start off with the 7th. On the 7th, what do we got? Whoops. So on the 7th, we have a massive 4-hour wick. Price moved down. On the 10th, we got massive bullish move, big candles, which created new highs and going into the next day. And then on the 11th, which was pretty much today for me, we just had massive consolidation on the 4-hour. I was able to scalp out a $5 move, and we'll talk about that later once we dig deeper into these time frames. So we'll go back to the 7th and go to our hourly and just look at the structure. Overall, looking at the structure, I would love to be in buys always. When the market opened, we had our first bullish candle of the session right over here. Let's check out the 30-minute. 30-minute looks, it's still pretty like wavy to me. Like if you just look at that little pattern there, right, it's still on the way down. So sells probably would have been the best option. On the other hand, I think he could have still scalped a $5 move out of this. So for example, at open, price push down, right? Ooh, $3. See, I probably would have been stopped out after this. I'd have to check out the smaller time frame to see exactly how it went. But you see, like, this went up $5, $11 easily, right? Before 1 o'clock. Let's check out the 15-minute to see if anything else is different. So here it is, 15. Again, even if you took the buy after this came down $4 before, continuing up the $11 move. Buy after this. See, I don't usually take signals after. Like, I would love for it to have been in a significant area, or even taking sells up here, right? Because over here is the last place where support became resistance. But then again, this is at 12:15, where I don't think I'd be too comfortable taking a trade at that time. After 1 o'clock though, price pushed down again, and that could have been, the second entry. And even if you didn't want to take it to here, you probably could have still took it to the end of the wick, right? So let's say we took it after this. Boom, that's $11 move, or even $7. Let's look at the 5-minute to see if there's any opportunity for buys, just in case. So the 7th, that was Friday. 7th. Yeah, I actually traded on the 7th, which was Friday. Usually I don't trade on Friday. On top of that, I was on a plane too, which again was a really, really bad idea, and I should not have traded. I do regret it because I've been reading this book about emotion-free trading, and what really resonated with me was the fact that when you trade, you should be trading with your best interest in mind. So before any decision you make, it's questioning, like, is this within my best interest? When I buy with this contract size, with this lot size, with this amount of risk, is it in my best interest? Will I be here next week and able to trade? Anyway, the 7th was quite bumpy. If you got into your sells at the correct time, I think you would have been in a really, really good position. So let's check out the 10th. So now the 10th, same thing. I should not have traded on the 10th, but I did. I ended up taking massive sells on this wick, right? On the smaller time frame, I seen a break, and so what I did was I took sells when it got back up to here, but price just kept going up and up and up. And by the time I was able to, by the time I got stopped out, I already hit my daily limits, and that really messed up my day, because I had opportunities right here to take buys, had opportunities right here after it broke structure, opportunity right here that I would have lost, and then also just anything in between this, right? Because yes, this is a big range, $5 range, but even if I waited for it to go, halfway through the range, $3, right, I still would have been fine. Anyway, let's look at the hourly and then go back down. Let's see what else we can see. So on the hourly, right, what happens is 9:30, market opens and we push all the way up, right? So 9:30 market opens, we push. Alright. I was actually in sales before 9:30. So if I waited, I probably would have been in those buys. I did end up taking buys as well too, but I wasn't in the right state of mind. I didn't have the right risk applied, and not only that, my contract size was actually too large. I tried to trade a 5 contract, right, where every tick would be 675 on my small account, which really messed up my mental. So what I ended up doing was I ended up closing once it moved against me $1. But you can see quickly that price moved all the way up, right? I got into the buys at what, 33.21, and then I sold at 33.18, which is quite ridiculous. And again, that took up all my risk and my daily risk limit. And then what that really did was it removed any opportunities for the day, right? And that's why you really shouldn't be marrying any of your trades. Overall though, on the February 10th, this should have been an easy trade for anybody, right? With the right patience and time, you could have actually gotten a $5 move. So even if you waited for it to come up there, boom, $5 instantly, right? On the 15-minute, same idea. You probably might not have had an opportunity. Like for me, I only see one over here, but I would have been stopped out, right? Because it pulled down so much. And then I see another one just over here when it's consolidating. Usually when price moves up and it consolidates, it'll move in the same direction that it was going. Only issue I have with this area is the time, right? So it's between 1 o'clock to 2 o'clock. Here's another good spot too, where price bent and then came up, and then also another spot right here where price bent and came up. On the 5-minute, I love the 5-minute because it shows those bends really nicely. Again, depending on the type of trader you are, you'd be able to take advantage of these spots, right? Once you actually got into a position over here, seen this bend, got into another one, you could have had your stop literally right here, just below it, and then watch price continue going up. Now for the 11th today for me was pretty good. I got into 2 trades. First one was a loss, second one was a good trade. So initially initially what I did was I took buys in this area. So my first buy was at 33.62, just up here. 33.62. Price pulled down, stopped me out. Then I took another buy at 33.60.5, and I took this all the way up to here, 33.69.25, which is, a $9 move, right? I could have gotten another few pips here, but I was pretty happy with the $9 move that I got. I think this is a game changer for me because I had the lot size consistent and I only had 2 trades, right? So I was really trading with my best interest in mind. Even up here though, like I did have the opportunity to take the $5, but what I ended up doing was once we got up to here, I moved my stop to break even. So me knowing that I have that break even opportunity, I wouldn't be losing any money even if it decided to crash back down. After that though, I was tempted to take a few more trades, especially up here once it did break, but I didn't end up doing it. I'm really happy about that because I was done trading by 10 o'clock, which is, that's what, 30 minutes, right? You don't have to trade, for 8 hours a day in order to make money. It takes one position, stop loss, take profit, and then, you're done. Like if it were up to me, I'd probably take 1 to 3 trades a day and be completely finished because there's always opportunities every single day. Anyway, I still see S&P continuing the move up. Overall, it does look like it's going to continue. I don't see anything really stopping it, right? We came up here, pushed down. We were up here at one point, we pushed down for the corona, and we've been going back up ever since. What do I see this going to? I don't know. I think we could come up to 33.80, 33.400 if we really want to. It'll just be really difficult, that's all. It'll take some time. Anyway, thanks for watching. If you have any questions, concerns, let me know in the comments below. And as always, risk on.